The opinions expressed are those of the host. The material is for informational purposes only. It does not constitute investment advice, and it is not intended as an endorsement for any specific investment. Visit crestmontpw.com for more details.
Welcome to the Ascent. This is Sam McGee, CEO and owner of Crestmont Private Wealth. And today we're going to be talking a bit about financial bubbles. And those of you that have been around a while, that have been investors for, say, 2-3 decades, you're going to remember some of these that we're going to talk about today. And others you may not know about, and they are quite humorous. But before we do that, I want to frame, why are we talking about financial bubbles? Is it because I think we're in a financial bubble? No, I do not. I don't believe that is the case. So let's just lay that foundation right now. We're talking about January 2025, and we are talking about the history of financial markets and financial bubbles. And the reason why this is so important is because it illustrates human behavior. It illustrates what people do in a group setting or in a mass setting relating to greed. We're not talking about fear today. We're not talking about crashes. We're talking about bubbles, which is financial assets going up beyond an ordinary pace. There's speculative, insatiable demand, in some cases, very irrational exuberance towards demand for an asset. So we're going to be talking a little bit about that today. So you can avoid those things. You can see the warning signs of that kind of behavior and not get sucked into the hysteria of these things, because history does repeat itself. It absolutely does. And the same thing is with fear. Until the human mind is completely reworked, we tend to operate on fear of missing out and fear of loss. Those two things are very, very powerful. Regret is powerful. But again, we're talking about financial bubbles today. So let's go back in a little history lesson, and I think this one is outstanding. So those of you that were professionals in the 80s may remember this. So it's an overseas real estate bubble. It was the Japanese real estate bubble that happened in the late 80s. What had happened was there was a surge in the value of their currency. And the yen had basically appreciated tremendously due to a monetary and fiscal stimulus that the government had put in place. And that was because of a recession they had in 1986. And the stimulus worked so well that it basically led towards Japanese stocks, land values tripling. And very quickly, this happened really from 86 roughly to 1989. And get this is fantastic. This is the punchline. The value of the Imperial Palace grounds in Tokyo was greater than that of all the real estate in California at that time. So what happened next? The bubble burst in 1991, and it led to years of deflation, a stagnant economy, and what they refer to as the lost decade. Now, that is a sad story. What would create that? Well, first, the government created a massive amount of monetary and fiscal stimulus, which led to cheap, easy money and led to a lot of speculation, which is human behavior on driving prices up. Okay, sound familiar? All right, let's talk next about another example of a bubble. And this one hits close to home. So we're talking about the Roaring 20s. And back in the 1920s, not this century, the 1920s, there was a absolutely massive appreciation in the U.S. stock market. And the Federal Reserve was created and essentially extended a bunch of free trade. And there was some anti-inflation measures that came into place. At the end of the day, what occurred was there was a rapid expansion of economic activity, and then you had unchecked use of debt by individuals and corporations. So back then, you could buy securities or stocks on debt without any kind of regulation. There wasn't really much in the way of regulation on, margin calls and satisfying, if the value went down, that you had to cover your position. This eventually came to a head on the 24th of October, 1929, otherwise known as Black Thursday, and it marked the beginning of a massive Wall Street crash and brought in the Great Depression, which we've all heard about, that lasted well into the 30s. So again, this was driven by speculation. The right recipe had to be there. Cheap money, easy money, lack of sensible regulation, and there you have it. Great recipe for greed, which ends up pushing up values, and then at some point that bubble bursts. So one that was a long time ago that you may have read about, and maybe you've never heard about this. Again, this is Sam McGee with the Ascent, Crestmont Private Wealth, and we're talking about financial bubbles. Any kind of financial asset, any kind of real asset that appreciates in price at a rapid rate, an irrational rate, and then comes crashing back down. And the reason we're talking about this is to learn some of the lessons from history so you don't get caught in the trap of the fear of missing out on things you hear about maybe on the news, social media, and get unfiduciary advice and go chasing after a return that you might have a very bittersweet taste in your mouth later. We believe in diversified portfolios. We believe in a fiduciary approach to every client situation. And today we're talking about a history lesson on financial bubbles. So the last one that I'm bringing up is the tulip mania. So those of you that are history buffs may know about this one, but in the 17th century, specifically in 1634, the first world's investment bubble that I'm aware of occurred when the Dutch Republic started purchasing tulip bulbs. Yes, tulip bulbs. Those little things you put in the ground that grow tulips. So back then, those bulbs were a pretty big status symbol in the Dutch Republic. And they were extremely desirable. It showed, status for individuals if they had these. And during really the height of this frenzy of society there buying up these tulip bulbs, at one point, a bulb would cost more than the year's salary of a skilled worker or a townhouse in Amsterdam, if you can believe that. We're talking about a tulip bulb. The thing you can go down to Home Depot or Lowe's and get in a little baggie and go home and plant on your front porch. Oh, yeah. One of those was the equivalent of living quarters, a townhome in Amsterdam in the 1630s. So obviously that's absurd, and at some point, demand collapsed, and then the values nosedived, and it just gave a really good lesson for those that had bought up, maybe used their life savings to go buy these bulbs. Does any of this stuff sound familiar to you? It should, because it's happened as recent as the dot-com bubble. This is a more recent history lesson, was in the second half of the 1990s. Now, this is when the internet came out and dial-up was happening, and you heard that strange sound of when you got online, and it took forever, and there weren't things like music on Apple Music and Amazon Music. You had Napster, and it was just the infancy of the internet. And back then, there were companies that would have a business plan completely predicated on e-commerce or internet sales. And so the internet became this just unknown, not quite sure, but gosh, it's going to open up all this opportunity, which is true. The internet has been both good and bad. And these companies on the NASDAQ, as an example, rose 743 points at the beginning of 1995 to a height of 5,048 in March of 2000. And it more than doubled in the last 6 months that I just referenced. What happened from that point? Well, the bubble burst in 2002, and the NASDAQ saw a 78% decline after that. Now, it has since recovered a good deal, but if you think about that and that example of that tulip bulb, and you think about the example of a .com stock back in the late 1990s, could you apply that to anything today? Is there anything you think about today that people want you to buy that promote online, whether they're licensed to do that, whether it's compliant for them to do that or not? I see it all the time on social media. And number one, that kind of advice online is regulated, and in some cases is illegal, and should be for very good reason, because irrational exuberance and bubbles are really predicating on the concept of fear of missing out and get rich quick and easy money. In my 26-year career, what I've seen, there is no free lunch. And in the investing arena, you want to align fundamentals to what you're investing in. You want to align understanding of what you're investing in, and you want to remain diversified to make sure that you're not going to lose everything in a single bubble crash. So staying diversified, even if you have exposure to some higher risk assets, can make sense. So we're not advocating any specific area to avoid or even advocating that there is a current bubble. But I would argue that there are some asset classes out there right now that very well could be. And I'm not going to get into particulars today about what they may be, and it probably wouldn't take too long to figure out what I'm talking about. But you see, when you start seeing unbridled attention, unabashed of investing, frenzy on buying, and then support and rationalization by uneducated, non-professional people online on social media about why people should continue investing in these things, that should be a massive warning flag to all of you. At Crestmont Private Wealth, we develop financial plans that make sense for each individual family in a fiduciary manner, and the investment plan is a byproduct of that financial plan in a well-diversified, based off your risk tolerance, specific needs. We don't chase asset class returns, and we don't look at the latest fads and decide, hey, there's a fear of missing out, let's go get it. That kind of irrational behavior is, unfortunately, when unchecked, what can really harm investors. Now, it does not mean that there are not specific asset classes that have high risk, high return, high risk of loss that may or may not be included in your portfolio. But what we're talking about today is specifically financial bubbles and the history lessons associated with things like the tulip mania of the 1630s. We're talking about tulips that at one time, tulip bulbs, that were worth more than a townhome in Amsterdam. Obviously, this is not something that we believe will discontinue. There are plenty of history lessons. The question is, can you identify when you're in one? Very difficult to do. You have to really take education and a third-party view into considering the merits and underweighting the mania and the fear of missing out to take a practical, pragmatic, fiduciary approach to how you invest your money. My name is Sam McGee. I'm the CEO and owner of Crestmont Private Wealth. We are locally owned here in Boerne, Texas at 604 South Main Street, and we have an office at One River Way in Houston. We love working with clients. If you have enjoyed this show and you'd like to reach out to us, sign up for our newsletter, or even get a financial review on your situation and your portfolio, you can reach us at info@crestmontpw.com. Have a great weekend, and God bless.